Yeah, hello guys, welcome back to HumbleFx. Today we are going to be talking about something very important. This is void of indicators and all that. So for that reason, I'm going to delete this indicator so that you see what we are doing. Before that, I don't know why people are sending message like this. So this is not what we are going to do today. We are going to delete this indicator so that you see that it's not about it's not we're not working for indicators today. Just follow up and you see you get what we are going to do today. Today is going to be price action. So if you want to learn how to actually trade without having losses, trading with an edge, then this is what you are going to do. Let me do a landscape so that you get the point very well. Okay guys, this is my chart on crash 1500 and you see my entry point. I take entry right here. I don't know if I should put this a color so that you see what is there. Let me fill it so that you see what is actually there. Oh, you cannot fill. Well, you could see my box right there. So why am I taking this trade right now? This is information that I want to share with you. So if you want to learn how to trade, if this is what you want to learn, you want to trade with price action, then this is the right channel for you. Go ahead and hit on the subscribe button, hit on the like button, share to family and friends, and comment if this video actually made your day. All right, so this is a pattern that I want to share to you. So anytime you see this pattern again, you are going to make wise use of it. You're going to make wise use of it. So what is the pattern all about? This is not about indicator where it's crossed and all that. This is a super strategy that works most of the time. Yes, it's not the only great strategy, but I can bet you it works so much. Now, before we get uh, to the business of the day, you can join my Telegram channel where I do drop uh, so many things that helps us to trade successfully. Okay, you can join the channel if you wish to. Now the link is on this video description. All right, the pattern we're sharing in this video is this is it. First thing first, we are having an uptrend like this. Look at this. We are having an uptrend like this. Is making what is this uptrend is making higher low, okay, higher high, higher high, higher low, higher high, and the higher low also here before something happened in this place. So this is what we are going to be looking at. This is what we are going to be looking at. So what is this pattern all about? It now turns to a downtrend. From there, and now seeing a downtrend. So what do I expect in this market right now? What are we expecting? We're actually expecting the market to move up from here as it is here, to move up from this point and get to this point and drop if it will drop down. That is what we are looking for in this market. So that's why you see me, I'm buying the market right now. Okay, so I hope you have screenshot this thing so that you don't if I clear it now, you will not miss it. Now let me clear it. Okay, that is first thing. The next thing is that I drew my Fibonacci line. You can see my Fibonacci level. I drew that point. I put the first line here, and the next one I put on the low. Where the low? And I put the next one, the next line on the low here. Look at the low here. So, and where the trade is actually on this level, which is level of 61.8 Fibonacci levels, which is a discount level. All right, it has passed our equilibrium point, which is level 50. Okay, and now is on a discount. So anytime that you see a market on a discount, that is a good time for you to buy the market. If it's in a crash, you see it on a discount like this, you buy it. So what is a discount? If you want to learn, I've told you about the highs and the lows. Okay, now I'm going to show you a bit about a discount. So what is a discount? A discount is a point whereby the market goes below equilibrium. So what is equilibrium? Okay, this is ICT that you are learning right now. So if you want to learn more of this kind of stuff, give me a subscribe, give me a comment on the comment section, and the next video will be another part of ICT. Now here is equilibrium. This is level 50. This is a equilibrium level. Why is it equilibrium? How do you get equilibrium level? First of all, you get to the high, the highest high, and the low. I use this low, for example. I use this low for my analysis in this example. I use that low. So at this level 50 is equilibrium. What happened at equilibrium? You entry points are always, you will always take trade at the equilibrium point. That is a buy for crash, and you will see at this point there is a movement up before the crash continues downside. So if you really know what you are doing, you might have actually gotten some pips from this equilibrium point before the spike happened. But if you're taking a long trade, you don't take it from that equilibrium point. You take your trade at a discount. So anything below level 50 here is in discount. So we are now in discount market. Okay, anything below level 50 is a discount. That is your level 50 of your Fibonacci level is a discount. So from 50 to 61.8 down to the next level down is a discount. So that is, we call it OTE, which is optimal trade entry in ICT terms. All right, so now we have this crash 500 on a discount. So we are taking the buy at that point, because also we have some levels right here. These are levels here that is making this thing as a confluence. See that this is a confluence market. Confluence. We have the market being on a discount. Also, we have it respecting a zone, which is this where you see me draw a box. Okay, so we are expecting it to move on my arrow. Either it's go to level of 38.2, that's your first TP. Sorry, your first TP is level 50. Your second TP, let me show you. Your first TP is level 50. Yes, the level of equilibrium. The next TP is level 38.2. Next TP is this 23.8. Then the next TP is 0, which is the level here. So when there is a break of this point, that's when we look for a better buy, a longer buy. But remember, we are on a 1 hour time frame. Okay, so that is that. You have gotten this point. Have you gotten this point? I believe you got this point right now. First of all, we have this. This is the first thing we did. We know that it's an equilibrium. This is we trading ICT. Now, the first thing I told you guys about this level, this point, this stuff here. So let's now go back to this. This is normal technical analysis. Now there's a pattern I want to show you. The first thing is check if there is, if it's an uptrend. Look at this. We have the uptrend, the lows, the highs here, So we know that from there is an uptrend, right? Now this forms, there's a level here, which means we should, after this particular low here, we should see a market that will go above this other high to form another higher high. But what's happened? Instead of forming another higher high, it came down and break this low. It came down and break that low. So once this low is broken here, so what do we expect? We are expecting the market. We now see that there is a break of structure. we want the market to come back broken place into that broken place, then we expect a massive down movement. That's why here is a TP, your TP3. Okay, but if it goes up against these points and go up, then it's more buy. But in this kind of scenario, we are looking at selling at this level here. So we are buying from here and we're taking our sell order from this point where your total loss will be above this high. If you are selling from that point, here is your stop loss. Now we are buying here. Here is our stop loss. We want to stop loss below these levels here. Okay, so that is very simple and easy. I know you have gotten this point that I just give you right now. The points there, if you can practice this on your account and understand how to draw, see this pattern and work it out, then you're actually going to make you're going to take a high probability trade. Okay, this is price action. There's no indicator. When this one cross, when this one cross is about price action. Now let us check boom 1000. This is crash 500, right? Let's check boom 1000 and see what's happening there. Okay, you see I'm also on a trade here. You see I'm also on a trade right here. There's also another pattern. This is the same thing that happened. You see that this is the same pattern that just formed on crash 500. See, the same pattern is forming here. And guess what? I sent this trade on the group channel. So if you want to be getting free signals like this, you can join my channel. You can check on this video description. You will see the channel and you will join it. Okay, and the VIP is also open. If you want to join VIP to get constant trade, you can join the VIP. It's very affordable. So why did I take this sale? Why am I selling this market at this point? I told you guys in that the other example, which we are checking these points, we saw that there is a market going down. This is already a down movement like this. See that there's also a movement like this. So we know that this from this point is an uptrend because it's forming lows and highs and lows. But what happened at this point? What happened? Why am I selling it? In the first point, I saw that this market goes up like this, from this low, from this high. Instead of coming down to form low and go up, it's rather broke this low, which is this. It broke this low. So what do I expect? If I saw this early enough, I would have bought. And if I bought from here, if I buy from here, I should take my sell also from this level as well. So I will buy from here. Here is my selling point, and I will sell, and I will expect the market to break this low and go and form another low. If possible, come back again to this point and continue to sell down. You get the scenario. This is the scenario that happens. That I told you guys about on the crash indices. So why is this entry valid for me? If I look on the past, if I check on the past, I will see something here. You see this past. If I check on the past, there are levels in the past. So that level is my entry point. Those levels in the past is my entry point. So where is my stop loss? Above this high. Yes, that's my stop loss. And you see my first TP should be here. My next TP is here. So if I can take this trade up to this point, I can exit here and wait for the market to retrace back to this level and then shoot down side again. This is trading with an edge. You know that even if the market go against you, you are trading a principle. You are not just trading. You are trading a principle that works. Okay, so if you are seeing this video right now, you can also join this trade. If you are seeing it now, you can join it because it is going to do well. I'm expecting market to come down to this 12273 and all that. Okay, so I'm not afraid, even though it seems uptrend, but this pattern I'm seeing here is actually a strong pattern. So what is the pattern I'm seeing here? Last year you should see. This market come here, come down, give me a low, go now, give me a high, Instead of giving me a lower low, a lower high rather, he broke out this level here. He broke out this level and broke it out here. So if I see something like this, what do I expect? I should expect market to come down, come back to this level. And what happened? There's a retest of that place, and that's why we are selling. So where do I expect to take profit? There's going to take profit here. First TP should be here. Here's the next TP. So we expect it to come down all the way down here. If possible, retrace down up here, then shoot down again. Alright, so that is just the simple thing happening right here. It's very simple to see. Alright, very simple to see. So it happens all the time. Now let us also see here. So look, even this place we are seeing it here. Even here we are seeing it here. The market is forming highs and lows. So it's going to form a low. What happened here? It came down like this. Did not form the low rather. This place was broken. What happened? It retested. Even though this market should actually come up to this point, but it did not reach that point before it shoots down. So if we naturally we might have missed that particular entry, but still we know the principle we are trading. Okay, so it happens. See also here. This is also this is another set of it, another part of it, though not the full aspect of it. The market was going up and down, up and down. It came here, it did not form a low, it broke out, it broke out this structure. So what do you expect? More market will come back. And what happened? As it broke out of the structure here, it came back to it and shoot down. Okay? So that is always very simple thing. Very simple thing that you are supposed to know. It works so good. Works very good. So all the time, if you see such kind of pattern, you should actually not bother, because you know you are going to make a good profit out of it. So should we check another pair apart from human crash? Okay, so let me check. I don't want this video to be too long, so that's why I'm trying to make this video short. But let us see if we can check another pair. Maybe crash 1000. We crash 1000. So at this crash 1000, at this region where it is now, where it is right now, is on a strong level. Let us go down to 4-day time frame. If we go to the day time frame, we are going to see something sweet here. We see that the market is actually at a strong level on the day time frame. I can go down to 4-hour time frame, and here this market is actually going to buy. You know why? Because I'm seeing there are so many rejections around this point. There are so many rejections around that point. So for that point, I'm expecting it to do what? I'm expecting it to buy because of these rejections here. It's trying to break out that point, but it's not breaking it. So I should expect it to buy at least for this point. Then remember, this is 4-hour time frame. So any small movement there is a good profit for you. Okay, so those rejections down here is a good entry confirmation that I'm going to buy that market. All right, so this principle works on every aspect. It works on every aspect, not just now. Let us see it here. See what I told you guys right now. We just talk about this thing. This is happening on the 4-hour time frame. Remember, this is a 4-hour time frame. We are seeing ups and downs, forming lower lows. But instead of forming the lower low here, he broke out. Look at that. Instead of forming the lower low, rather, he broke out of it. So where do we expect to entry point? We expected to enter at this zone here, which is here. So this is the entry point, but it even went above this. But our stop loss is above this. So maybe we have stop loss here. It not hit our stop loss, but here's our entry point. We enter from this level here. That is our safe entry. So when it go against us, we enter again at this other level here. Okay, so you see that we are on the 2 entry points, and what happened? There is a shoot down. There's a shoot down which went down. So where is your TP first time? Your TP should be the current recent low, which is here. If you entered your market right from here, here is the lowest low. Here is the most recent low to enter to close your market, and you should close your market at that point. That's your safest TP. Okay, so let me not make this video too long. Then I'll have to stop this video so that I can continue this same tutorial in the next video. So if you like this video and you want us to do such videos again, okay, do me a favor, like this video and comment on the comment section, and so that I know that it is actually how you actually liked it. Okay, so see you in the next video, and until then, I remain HumbleFx.